Outsider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a fee-only financial planner with the Family Wealth Consulting Group. Through another company called Estate Guidance and Insurance Services, Peggy offers a range of insurance products, including long-term health care insurance. She has more than 30 years of experience in the financial services industry. Must be somebody else, but you started when you were 3 years old?
Yeah.
Anyway, Peggy assists clients with family wealth planning, including legacy, financial, estate, investment, and insurance planning. Her credentials include Master of Science in Financial Services, Chartered Financial Consultant, Chartered Life Underwriter, Fellow Life Management Institute, and Chartered Advisor for Senior Living. That's a boatload of credentials there, Peggy.
Certainly is.
Congratulations on that.
Thank you.
Okay. So today, Peggy and I are going to be talking about an important topic for a lot of people these days because, darn it, we're all getting older. And it's about long-term care insurance. And these days, especially, it seems like, you know, I mean, if you're not in long-term care yourself, you're caring for a parent who is in long-term care, or a grandparent, or a friend. Right. And so this has become increasingly an important subject for all of us. Peggy, why would someone consider getting long-term health care insurance?
Well, it is a way to help protect your wealth. It is a way to get into that facility that you may want to get into. You have the cash dollars to work with, provided you satisfy the activities of daily living, of not being able to perform eating, bathing, dressing, toileting, transferring. It is also a way to make wise choices about the health care that is available to you. It's a daunting task when you become disabled at whatever age, but particularly as we age, to make wise choices about what kind of care is best for me. And the better policies that are available do have case care coordinators that are not hired by the insurance companies, that are actually provided by the insurance companies, but they're not hired by the insurance companies.
Okay.
It's a list of names that you're given to call to make appointments with these case care coordinators, and they can help you or your family member make some wise choices. There's just too many options out there for our health care, so having if you can qualify for the long-term health care, I think it has a place in the family wealth planning process.
Okay. What health care services are covered by these long-term care insurance policies?
Well, again, the better contracts will definitely cover the nursing care of the skilled facility and at-home care. And the really good contracts will cover assisted living facilities, they will cover adult day care centers, and they will provide respite care for the family member who may be giving some care as well. Those are the kinds of contracts, if you can get them, are the better ones to have, where you have a multiple of choices of how your care can be given to you.
Mm-hmm. Okay. Who qualifies for coverage under these policies?
That is where we run into some difficulties at times, yeah.
Okay.
The people that want it the most sometimes cannot get it. It is very much a medically underwritten product. You do have to qualify, the proposed insured does have to qualify medically for the policy. The medical review that takes place is typically a review of the medical records of the proposed insured, along with a questionnaire that's in the application. Plus, if you're over the age of 60, you may be getting a telephone call, or if you haven't seen a doctor in 3 to 4 years, you may get a telephone call. And the telephone call reviews your medical history with you, and it also will probably do some memory testing, like asking you to remember a series of words and then picking a couple of those words to make a sentence with them or something like that. By the age of 70, typically they will be coming, the insurance company, will be sending somebody out to your home to interview you. And the purpose in that is to be sure that you do not have severe cognitive impairment that might even be overlooked by some physicians because of how long the physician has known you. They
They'll overlook it.
They're protecting the patient, so to speak.
Yeah.
So you want the insurance company to do a superior job in their medical underwriting, so that it keeps the premium payment somewhat reasonable and doesn't buy a future claim immediately. That they are doing the appropriate underwriting. However, it is very discouraging when you have a client that gets declined.
Yes.
And I have been through that with several clients at this point in time where they have been declined, and long-term care insurance is just not an option for them. And
so when we say decline, it means basically they refuse to provide the coverage.
Right.
Yeah.
And the insurance companies handle the fact that there's been a declination taking place. They write directly to the client, and I am very proactive with that process. I let the client know that the letter is forthcoming, and to the best of my abilities, I tell them why they have been declined for the coverage. A lot of the companies are very hesitant to give specifics. It's just they're declined. It could be because they have osteoporosis, or they have other health issues that just will not allow the policy to be issued.
When you're applying for these, like I applied for life insurance or disability insurance, I've had to actually have medical examinations for those policies. Do you have to have something like that sometimes for these as well?
Actually, I've not had anybody have to go through a medical exam for long-term care insurance. It's done strictly by the application and a very thorough review of the medical records.
So
and
basically
then,
going to the doctor and
yes,
so forth to get the details.
Right, and if that's why also they will call a younger applicant on the phone if there has not been an appointment with a doctor in a period of time.
Yeah.
Wanting to find out what's going on with you. Why haven't you been into the doctor, especially like if you're in your late 50s and
a lot of us just don't like to go to the doctor.
Yeah, I know they might tell us something we don't want to hear about.
Right. You're going to hear that stuff for.
Yeah.
Okay. So here's sort of the big deal, and that is just the premiums. I mean, isn't this really expensive? And how do you justify the expense for this insurance?
It can be a very expensive product. It depends on each client's situation, on how we design the contract. There's a number of ways to do that. We look at the elimination period, the waiting period on the policy. The shorter the waiting period, typically the higher the premium. However, some of the better contracts do have a provision that if you can have home care first, day for day that you have the home care, 1 day of the waiting period is waived. So that can be a helpful provision in the contract. The other things we look at is the benefit period of the contract, and also the daily benefit amount. How much, in the state of California right now, it's about $260 per day, $260, $270 per day in a semi-private room in a nursing care home.
Now you can see why some people say, I think I'll just go move on a cruise ship.
Yeah. And actually, nursing care homes are less costly than 24/7 care in your home. Typically, that will cost you more.
Oh yeah, because you're paying for your own person to be there.
Right, so it is a more expensive way to get the care. And again, each client situation is different on how they choose to handle that long-term care need. And we can also look at the cost of living riders. We're very much, though, an advocate of cost of living riders. Not much point in buying a long-term care policy and not having future growth to it.
Yeah.
The $270 that it takes today, 20 years out, that number could be double that amount or more.
Yeah.
And if you don't have some kind of compound inflation rider on it, it doesn't make a heck of a lot of sense to purchase the policy. But when we're working with our clientele that typically are higher net worth individuals, the way we handle the premium payment is to let their asset pay the premium payment. We don't take it from their current cash flow. We let their if they have like what we call their trust account, which is typically titled in the name of their living trust, the client gives us authorization to have a check sent to the insurance company directly from that account. Psychologically, it just makes a difference in how they perceive and feel about making that premium payment. It's not coming out of their living money. It doesn't come directly out of their checking account, so there is a different feel about how we're protecting their assets.
Uh-huh.
But we do think if you can qualify for long-term care insurance, we do think it is a way to help protect your wealth.
Yeah. You know, as you were talking about this cost of living thing, I just want to come back to it for just a moment. And it's just that it's because of life expectancy these days, and that the life expectancy keeps getting longer and longer, and it's becoming, you know, I've had two parents, or I will shortly have two parents that have made it to 90. Meanwhile, though, you know, my grandparents, or at least my grandfather, one of them died at about 59, one of them at about 70 something. I mean, that's 20 years difference. That's
Correct.
a big difference.
It's a big difference.
And
yes.
and the thing is, though, is that this is not so unusual anymore. I think I saw a statistic not too long ago that the expected life expectancy, when, you know, for both spouses, when you're 65, is something like 35 years.
That is correct.
And
one of the two very likely
yeah.
could live to be age 100,
Yes.
or both of them.
Yes, and again, it just keeps getting longer and longer. So to think that this policy may have to provide benefit for you really for quite a long time.
That's
maybe.
correct. That's why it's very difficult for the insurance company to know how to charge for it.
Yeah.
But as an example, to piggyback on what you just said there, a couple of weeks ago, I put on a party for my almost 91-year-old father at the independent living facility that he lives in, and he had three of his table mates come to the party.
Yes.
And the youngest one was 89.
Okay, so almost 90.
Yeah, and the joy that these folks had talking with one another, their ability to participate in very powerful and meaningful conversations, it gives you a whole perspective on the dynamic of the people entering the generation or the decade of being 90 years old. Mm-hmm. They're very vital people, and they want to be here as much as we want to be here.
Yeah.
So it's
one of the things
just interesting.
I got a kick out of. My dad was in the hospital several years ago, and so I was seeing him. But one of the areas that I went by is the exercise room for the people that are doing their physical therapy after their cardio surgery and so forth. And these people were happy when they're working out. And it's like, it's good to be alive.
Yeah, it gives them the reality that they're still here, yeah.
Okay.
Yeah.
Well, I guess we better move along here. So how are the benefits triggered for this type of insurance, and how are they paid?
Okay, typically the benefit will be triggered by activities of daily living, and those activities can include eating, dressing, bathing, toileting, transferring, continence, and cognitive abilities. As a matter of fact, if it becomes cognitive, if you develop a severe form of dementia or Alzheimer's disease, you automatically qualify to have benefits paid from your policy. The other areas you need to lose for most contracts, you need to lose 2 activities of daily living. And I really don't know somebody who's just lost one. If a person loses the ability to dress themselves, they probably have also lost the ability to bathe. The two things kind of go together.
Yes.
If they've lost the ability to eat, which is usually one of the last things we will lose outside of some severe well, I can't think of anything actually right at the moment, but eating is one of the last things that we usually lose. It's also one of the last things we learn to do as a child properly too. So it's an interesting phenomenon. But those are the things that usually trigger the benefits to be paid. And how the benefits are paid, a lot of contracts have daily benefit amounts, such as that $270 per day, up to a maximum that the insurance company will allow. Each contract pays differently, but most, like the Genworth contract, which I work with a lot, it's going to pay per diem on it, and in whatever daily benefit amount you have, it will pay up to that amount.
Okay. Now, do employers provide this type of insurance to their employees as employee benefits?
Yes, there are many employers now who are offering the long-term care insurance, and when I work with my clients, I do my best to encourage them, if they have the group coverage available, to go ahead and purchase that group coverage. Typically, it's going to be through a quality insurance company, and additionally, the premiums are going to be less just because of the law of large numbers that the insurance company is getting.
So it's sort of a group plan.
It is a group plan. It may have certain nuances to it that aren't as great as the individual contract, but the cost differential is significant, and all the contracts I have reviewed, they are portable. In other words, the client can take them with them, take the policy with them when they are no longer employed.
Now, is this the type of thing you could, I'm just thinking out loud here, a cafeteria type plan, you know, where you can put money aside on a pre-tax basis for paying things. Is this something that you could do with that?
Actually, I haven't seen it done that way. That doesn't mean it's not done that way. What I have seen happen is it is a payroll deduction item. I have seen it where it comes out of the client, the employee's paycheck. I have not seen it on pre-tax, but that doesn't mean there aren't ways to do that. What I have seen just shows it as a payroll deduction item.
Okay. So when we think of medical benefits, life insurance, and so forth for seniors, the organization that most people probably think of, because they do a good job promoting themselves, is AARP. It's the American Association of Retired Persons. And a lot of seniors, well, you get your card when you're 50, right? Now.
Right, yeah.
So they offer a long-term health care plan, and this basically the long-term care type of a program. Should the seniors that have that available to them consider other alternatives, or do you think the AARP is their best choice, or what do you think?
Well, I looked again today on that because AARP from time to time does change the insurance companies that they're working with. So I thought, well, I'll just be sure on who they are still working with. And they are working a lot with Genworth, which is one of the companies I also work with. And the underwriting process is very similar to what I have described, where medical records are reviewed and so forth. So they really do not have a proprietary product that is for AARP. If you think about that, if they did, lots of folks would be buying the long-term care only through AARP because they're getting a better rate and a better discount on the premium payment. And I think that could put the insurance company at risk of having, the insurance companies have to be sure they have enough reserves to pay future claims.
Right.
And discounting the premium in this case may not be beneficial to all involved. So, but having said that, AARP has a wealth of information on their website regarding long-term care and talking about what you do if you can't get the insurance. And I think it's a really good source for a lot of people to go to.
Yeah, so they offer these things, but also they offer a lot of good information to help people out.
They do.
So that's a good aspect for them.
Especially for people who are not working with an advisor and they just want to be able to get some quality information. I spent some time on the website today and thought that the information there was quite helpful.
Good. Okay, what is the California Partnership for Long-Term Care?
Well, it is a program that has been created by the state of California and the Department of Health Services. And there are some quality insurance companies that are able to put a plan together for long-term care insurance, which is called the Partnership for Long-Term Care. And a couple things that happen with that is the Department of Insurance still has to review the contract for rate structure and contractual provisions, but the Department of Health Services is also looking at it from the perspective of health services versus reserve requirements in a contract, which is what the Department of Insurance does. And together they have been able to come up with some plans that work for the consumer. One of the big things that it does that other long-term care coverage does not do is it provides an asset protection component. And what that says is, as an example, if you have $500,000 worth of assets, and you have a policy that's going to pay $250,000 worth of benefits, you are in essence able to protect $250,000 for your heirs or others that you care about, and not have to spend that down. Mm-hmm. That $250,000 is always protected. Mm-hmm. The other $250,000 may not be protected, but at least that $250,000 would be protected. For higher net worth clients, that becomes less of an issue, the asset protection component. But for folks that are in the $500,000, million, $1.5 million area of assets, that could become a really critical component of the long-term care planning, to have that asset protection available.
Mm-hmm. Okay. Well, what should you do if you can't qualify for this insurance?
That's where you need to have a really good community around you. You need to have hopefully family members that are close with you, that you can be in touch with and say, I need help. Mm-hmm, mm-hmm. It doesn't necessarily handle the economic component of it, but it does handle a lot of the emotional component, and it helps with the hand-holding. Mm-hmm. I need somebody to come over and be with me. Mm-hmm. If you have a good network of people around you, that's very helpful. Also, there's some very sophisticated planning that can be done that is, when it's done properly, is very beneficial to the entire family. Mm-hmm. In my own instance, without getting into a lot of legalese, I'm not an attorney, I can't practice law or prepare documents, but I do know that there are some legal ways that you can help protect the assets so that all those assets don't get spent down. They can be spent for the person, for the patient, to their best benefit, but you don't necessarily have to spend everything down. You can create something that works for the patient, the older person, but also can help the family.
Mm-hmm. And I've had people as guests on the show before, and we've talked about things like Medicare planning and planning for some of these veterans benefits and so forth that can help to finance some of these long-term costs. Right. And so there are these alternatives where you can get specialized help sometimes.
Yes, actually the veterans benefit area is has been historically one of the best kept secrets out there.
Right.
And it's coming more and more to the surface now, and it depends on a number of different issues as to whether you qualify, primarily financial or health. But it is definitely part of the long-term care planning process, and we do work with appropriate legal counsel on that with our clients if we see that we may have a candidate for that.
Right. So anyway, and so folks, I'll just remind you that all of our shows are posted at financialinsiderweekly.com, including this one, but also, as I said, we have some on Medi-Cal and on these veterans care type of benefits that are available, and so you may want to take a look at our past episodes for that. Peggy, maybe you'd like to share for a few minutes some case or history or personal experience related to this area of dealing with this long-term care insurance, and where you've seen it, really help people, and some of the challenges maybe that you've had to deal with, or what have you.
Yeah, I can come up with a couple of examples. Actually, I'm going to use my dad as one example.
Okay.
And he would not have qualified for long-term care insurance, but folks in their 90s would not probably have thought of purchasing long-term care insurance anyway. Mm-hmm. It just was not done. It's a relatively new product in that regard. But with my father, we were able to do some very sophisticated planning with legal counsel, where we had a situation where my stepmother was diagnosed with severe dementia or Alzheimer's disease, not sure which, and we had to split my dad and my stepmother apart. And with the planning that was done, though, my dad did some significant gifting to my sister and to me that really has worked out in his best benefit. We have been able to do some superior planning for him and to take care of him based on how he wants to be taken care of versus based upon how a government program says you can be taken care of. Uh-huh. And the beauty in that, the real beauty in that, is my dad had the ability to trust. He trusted me, and he trusted my sister.
Uh-huh.
And that is where a lot of parents have an issue of, you want me to gift my money to my children?
Right.
I want that control. He had the ability to do it, and it's worked out beautifully for him. And I think he is very grateful that we put the planning in place that we did. Now, on the flip side, I did have a client that has now passed away that was able to use long-term health care benefits that had been put in place just very briefly before she became ill. And the policy did pay, and it was very rewarding to see the contract actually pay off. And about 9 months worth of benefits was paid prior to her death. And when I say I like that, I like to know that the planning that we put in place actually had some meaning and actually did what it was supposed to do. Mm-hmm. So those are the two things that come to my mind immediately, that when you do the long-term care planning, you can get some pretty superior results from that.
Okay. Well, I think we're getting close to the end here. So I think what I'm going to do mostly is thank you for coming and being as my guest today.
Well, you're welcome, Mike. Thank you for having me.
And folks, I hope that we've given you some things to think about. I mean, this is a significant investment, and so
it is.
And to afford this is a big deal, but it is something to really think about, because we may be living for a long time. And so, so provide for our long-term care, and to not be a burden on our families, it should be sort of a goal for each one of us. And so think about that very carefully. And and I'm sitting here without my long-term care policy right now, so so I can take it very seriously. Anyway, we'll see you next time on Financial Insider Weekly.